Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May, and this is Getting Started with thinkorswim. You know, I was thinking today, the job of an options trader, keep tabs on so many moving parts. When we're planning a trade, how much can it make? How much can it lose? What's the break-even point? What are the probabilities of success or failure? And how are those things going to change over time? Wouldn't it be nice if we just had a tool, maybe a chart that would just show us how those things, how those variables might change? We actually are going to be discussing just that today. We're going to be reviewing a tool on the thinkorswim platform known as the Analyze tab, and specifically the Risk Profile tool. I think it's going to be exciting and illuminating for a number of you. Very much looking forward to that discussion. This is lesson 7 in an intended series of 8 lessons. So I hope that you'll join me for next week's concluding lesson. But before we get to today's discussion, let me first of all say hello to everybody who's already chiming in from all around the country. Hello there, Jack and John, Dale, Tom, Eva, Manuel, Helen. I saw somebody out there from Idaho. There it is, Frank. Great to see you. I'm actually an Idaho native myself, but welcome everybody. If you're returning, welcome back. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. It does kick off promptly 3 o'clock Eastern Standard Time on Monday afternoons. And this one typically runs about half an hour. So that's about what you want to budget. And as a final heads up, my very good friend Ben Watson is going to be hanging out in the chats, answering any questions that I can't get to just during the natural flow of the presentation. Thanks for being there, Ben. You're a fabulous resource to have here in the webcast. And everybody, speaking of webcasts, I would also suggest that you follow Ben and me on X. If you're not doing that, it's at Ben Watson CS, at Cameron May CS. Those are our handles there. And it really is the very best place to connect with your favorite presenters in between these webcasts. All right, but let's get right into it. The very first thing that we need to do, of course, is to consider the risks associated with investing. Risks are legitimate, so these disclosures, we need to bear these in mind. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right. So with that accomplished, a quick review of the series that we've been moving through over the course of the last month and a half. We've already worked through those first 6 lessons and getting ourselves acquainted with the thinkorswim platform. And today we're talking about the Analyze tab, and we are going to be focusing the bulk of our attention, possibly exclusively our attention entirely, to the Risk Profile tool. Now, for those that are options traders in the audience, this is going to be a particularly potentially valuable tool. So looking forward to the discussion next week. We'll round out our 8 lessons with the tools, education, help tabs. But for today, the agenda includes exploring the navigation of the Analyze tab, the Risk Profile tool. We're going to be talking about resources for particularly options traders on that tool. And we're going to be really focusing on evaluating example strategy candidates. That's what the tool is designed to help us do. So if you're not familiar with thinkorswim, I'll just give a quick reminder. We are going to be using the thinkorswim downloaded desktop version, not the web version, or if you look at this on your mobile device, it might look a little bit different. But there are 2 places to download thinkorswim. You can download from schwab.com or thinkorswim.com. But once you accomplish that download, just log in using your Schwab username and password. No need for a unique thinkorswim username and password. Okay, so let's go to the thinkorswim platform and let's look at the Analyze functions. Okay, now to set the stage for this discussion, we are going to be breaking down the elements of a potential options strategy, a potential options trade. We're going to be talking about how much can it make, how much can it lose, where the break-even point is, what are the probabilities of success or failure. So to do all of that, we need an example trade. So here's just an example chart. Let's say that our hypothetical investor out there has had a look at Amazon and they've decided they think that Amazon's likely to continue going higher through January 19th, and they're going to structure a bullish trade around that assumption. Maybe they see that it's had an upward trend, broken through near-term resistance, whatever their reason or their logic for taking on a bullish trade, let's just say that that's the assumption for today's discussion, okay? So let's go to that Analyze tab, and we're going to go first of all to the Add Simulated Trades area. Now, what you'll notice is if you were to compare this to the Trade tab, it almost looks identical. You might not even notice that I'm switching back and forth between the two. Here's the Trade tab, and here's the Analyze Add Simulated Trades. And you might think, well, Cameron, this is a paperMoney account. Aren't they all simulated trades? Yes, but this is a specific function that's tied quite directly to the next function that we're going to be using, okay? But it allows us to actually place practice options trades and very quickly analyze the potential pros and cons of those trades before we go ahead with the trade, okay? So analyze, add simulated trades. Let's come down here to the 19th of January. And for today's discussion, I'm just going to put on a bull put spread. Now, I'm going to go into this with the assumption I'm speaking to those members of the audience who at least have somewhat of an interest in options and somewhat of a background in options. Okay, so our example trade is going to be a 19th of January bull put spread, also known as a bull put vertical. So let's pop down here in our options chain. And you may have noticed on our chart, looks like resistance just below that 150. How about if we put on a bull put spread for the 150, 145 strikes? Now, if you're not terribly familiar with a bull put spread, basically this is going to be a trade that's going to theoretically perform best if the stock remains above $150. Okay. But to construct our trade, we place the trade just like we would on the normal trade tab. Even though we are on the add simulated trades in that environment, we're just going to click on the bid price to sell the order, to create a sell order for the option that we intend to sell. And then I'm going to hold down the control key on my keyboard. Maybe some of you don't know this little navigational tip on thinkorswim, but if you hold down your control key, it allows you to build upon an existing order, okay? So I clicked on the bid price to create a sell order. And let's go up here to the ask price of the 145 put option. I'm going to click on that, and you'll notice it just built upon that short option that I already had there. So now I've constructed a 145, 150 bull put spread. Looks like right now it's pointing toward a possible 112 credit. I'm going to dial that down. Let's say that we're willing to accept a 110 credit, and let's lock that. Okay, so the price doesn't change as we go forward with the rest of this discussion. And I'm going to leave this on one example contract pair. All right. Now, we could go ahead and place this trade, but if you're at all familiar with options, you know that there are a number of variables that could potentially influence the outcome of this trade. Plus, we need to know how much we could make, how much we can lose, what the probabilities of success and failure are, where the break-even point is. And a lot of you can probably already do this in here. That's good. I would suggest that you learn option strategies to the point where a lot of this is second nature before we start using calculators or tools that would that essentially act as a shortcut to these characteristics of an example trade. Okay. But now that I've constructed this trade, I can now go up to the Analyze tab, and you'll notice the second sub-tab is known as the Risk Profile. Now, as we move here, how many of you, we have, 99 people already watching the live stream. Go ahead and chat in, just a quick yes, if you're familiar and comfortable with this Risk Profile tool. Give me a no if you're either not familiar with it or you haven't reached a level of comfort with it, okay? So as you give me that feedback, I'm going to click on this Risk Profile tool, and what we're presented with immediately is a chart. So let's start to break down this tool, because I know with thinkorswim, there are some tools, you'll learn them pretty quickly. For others, there's a little bit more of a learning curve. But this one does take a little bit of practice to get used to, okay? But the initial chart is basically a profit and loss chart for the trade that we've just constructed. You'll notice here's our trade right down here. And this is essentially a breakdown of that trade. All right, so I'm getting a few yeses, a whole lot of no's, okay? So I'm going to definitely try to go at a pace that everybody can follow. But basically what we're looking at here, let's first of all turn our focus to this green line, okay? And this is just showing us intersections of profit and loss against price levels. Okay, so if you'll notice here off to the left of our chart, we have numbers going up to plus 200, down to minus 400. Well, that relates to this trade that we've just constructed. For those that are familiar with vertical spreads, you could look at this and say, well, if I'm getting a $1.10 credit and I have one contract, what's the most I can make on this trade? It's $110. Well, interestingly, look at this line right up here. If you eyeball over to the left, you'll notice that intersects right at 110. Yeah, this is our maximum gain line. And if we have a $5 wide spread with a $110 profit potential, what's our loss potential? Again, for vertical spread, for those who are familiar with it, 5 minus 110 leaves us with $390. $390 is our maximum loss on this trade, and that's represented by this horizontal line right here, okay? And if you look at these numbers, we have 2 dates here that are going to be important. But you can also see, you know what, I'm guessing you're going to have to squint with this gray background and a green color scheme. You're probably not even seeing this number that I'm pointing at. I'm going to right click on that. Let's change that, okay? So let's right click on that, and I'm going to change that to maybe orange. So now it's a little bit easier to see. You see that number says minus 390, okay? That's our loss potential. If I point up here, that number now says a positive 110. Yeah, so this chart is already charting out for us the potential maximum gain and the potential maximum loss. That is our, what we might call our y-axis on this chart. Our x-axis, or the lower axis, is just price. So if we look at this line right here, it says 154.64. This is the current price of Amazon. That's where we are right now. And if we were to follow this up, it's intersecting with our maximum gain. So what this is telling us is that if Amazon is at 154.64 at expiration, how does this trade do? It performs optimally. It's our maximum gain, 110. Now, we can also follow the chart to the left or to the right and explore how our trade might do if price falls or if it were to rise. And specifically, this line is telling us how much we could make or how much we could lose at expiration, which for this trade is the third week of January. And you'll notice our date here says third week of January. This is the day, you know, options actually technically expire on Saturday. That's January the 20th, okay? So this line is showing us our profit or loss potential at expiration. Well, that's pretty handy. So if we construct a trade here, we can just look and say, well, I wonder, you know, if on January 20th, if our stock's at 160, how would we perform? Well, I can see at a glance, we'd be at max gain. How would our trade perform if we are at 143 or 142? In other words, if we're below our vertical spread. Well, in those scenarios, we're going to be at maximum loss. And you can see actually that maximum loss really kicks in right at 145, which is the lower strike on this vertical spread. The maximum gain kicks in at expiration at 150, which is the upper strike of this vertical spread. Now you'll notice there's a line between the max gain and our max loss, and that's telling us at expiration how our trade would likely perform if we were at a price level not below 145, not above 150, but somewhere in the middle. And you'll even notice that right there in the middle, there's a red hash mark. Well, we can sort of think this through logically. If we're not above our vertical spread in theoretical max gain territory, when we're not below our vertical spread in theoretical max loss territory at expiration, we must be somewhere short of maximum gain and maybe not all the way down to maximum loss. That's exactly what this is displaying here. So this is showing us the red hash mark is our break-even point. This is where we intersect with no profit. And if I hover over that, I can see that price is right at 148.90. Well, that's 150 minus our 110 credit, 148.90. So this chart is really doing a nice little job of breaking down how this trade may play out at different price levels if the stock price were to go up or if it were to go down. Are we at maximum loss? Are we at maximum gain? Are we at break even? Do we have some profit but not maximum profit? Do we have some loss but not maximum loss? All of that is captured just at a glance with that one line. Okay. So now you're probably wondering, Mark says you are afraid of this tool, Mark. Well, hopefully, as we look at this, it's going to become a little bit less intimidating. I haven't had to do anything with this tool yet to learn all of this information about this trade that we just constructed. We already know how much we can make. We know how much we can lose. We know where the break-even point is. All of this, though, relates to how the trade would pan out at different price levels at expiration. But for options traders, very commonly, as they're planning a trade, they might be thinking, well, I think the stock is going to go for a nice run maybe over the next couple of weeks. But before expiration, how is this trade likely to perform in the days leading up to expiration? That is what this purple line represents. So the purple line by default is just going to go to today. So today being December 18th, you'll notice down here, there's a date field, right? So this purple line, and also if you look over here, same date, December 18th of 2023. So this is showing us right now, here's the current price. How would our trade likely perform if the stock were to go up? Oh, I can just move my cursor and keep our eye over here on this number in purple. Well, let's see. I wonder if Amazon were to pop to 158 bucks, how would our trade likely do? It's a little bit obscured, but looks like we'd have about a $38 profit. Okay. What if it were to drop today? Well, if it were to drop, we'd have a little bit of a loss there. I can even change that color scheme. Let's click on that. See if we can get that to stand out a little bit better. How about red? Would that make it a little bit easier? There we go. It's still, just getting overrun. There's a slice behind there. I don't want to, that's what this dash vertical line is. It's kind of intersecting with that. But as we move around on our chart, we can see, all right, well, this is how our trade is likely to perform if price moves today, up or down. Well, that's interesting, right? We can see how quickly we might start to move toward maximum theoretical gain. We can see how quickly we might start to move toward maximum theoretical loss. But what about other days? I wonder if we put this trade on today, I wonder how this trade is likely to perform if the stock were to move up, who knows, a few dollars by, let's say, next Friday. Well, now we can come back down here to our date field and let's start moving this up one day at a time. Now, let's actually just assume that just time goes by. Now, this vertical spread that we just sold is out of the money. And for those options traders who are familiar with out of the money vertical spreads, this credit spreads, know that as time goes by, if price doesn't move and if volatility levels don't change, time is actually working in the favor of this trade. So if I were to start to advance our date here, let's start to move this up from today, Monday the 18th, to the 19th, to the 20th. What are we starting to see our line doing? Well, our profits are increasing. You see that? That red line is starting to conform to our maximum theoretical gain. Yeah, we're starting to see profits. So now I can just move to, let's say, I wonder how we'd be doing on December 26th as an example, day after Christmas. How is this trade likely doing if the stock has moved to $160 and now this line is going to give us a profit or loss scenario, not as of today, but as of December 26th. That's pretty cool. Now, Eva says, I noticed you changed the colors to make the Analyze tab easier to use. How do you folks who are colorblind deal with that? Different colors? Yeah. Yep. Yeah. If you're not seeing a great distinction between, green or red, you can just right click on the date and you can change your color scheme right there. Yep. Very good. All right. So this tool shows us profit or loss scenarios for expiration. It can also show us profit or loss scenarios for any date between now and then. Now I'm going to introduce an addition to this tool It's called price slices. So let me just click on, if you'll notice a little caret right here next to price slices, I'm going to click on that and it opens this up. And this, once again, when we introduce new information, it can feel a little bit intimidating. So let's get ourselves oriented for just a moment. So the price slices are referring to these dashed vertical lines that are running down through the charts. They're like they're slicing the chart in half and they're slicing the chart into quarters over here. So they're called price slices, okay? The primary slice is this one, 154.73. That's just the current price of the stock. So you can see that here. Now these other slices by default are set 10% up and 10% down from the current price. Okay. So what this is showing us, this price slices field is showing us how our trade is doing right now. And actually, since we constructed it, we're up about 10 bucks. Okay. And how we would likely be performing if the stock were to go up 10% or down 10%. Stock goes up 10%, we're up to 104.61 and very close to our maximum gain. If it drops down 10%, we're down 355 bucks and we're very close to our maximum loss. But having these fields here is pretty handy when we start to play with our dates and other variables down below. So CL says, could you please explain what's the date at the top right corner is used for? Yes, I can. Yep, we'll get to that. Why the date on it should be set to the day after the expiration date. Good question. Okay, so CL's asking about this up here. We'll get to that in just a moment. But for now, we're going to park that, put a pin in it, come back to it. Let's focus our attention down here on this date. Now you'll notice things are getting kind of squeezed down below. I might need a little bit more space. So you can actually click and drag right here in the center, that margin that separates the chart from our information down below. You can see just a hint down here, that's our trade, okay? But I wanna be able to see the price slices, and I also wanna see these other two fields, because up until this point, we've been playing with the date, okay? And as a matter of fact, let's go ahead and just reset this. There's a little reset button here. We could just click on the calendar and change it back to today's date, or we can just reset our parameters and date right there, okay? But we know as options traders that time going forward can have an impact on an option trade. Price changing can have an impact, but also volatility. So you'll notice there's a field here for date, in other words, for time. There's a volatility adjustment. That's not volume, but volatility. And there's a stock price adjustment. So I can start to play with the potential performance of my trade. So here's our trade. Here's the current price. Price has not moved yet. And I want you to watch this column right here, PL open. What does that mean? That's our profit or loss since we opened this position. And right now, we just opened it a few minutes ago. We had already tinkered with the date, helped it out with some time decay, but I just set it back to the original. So we're right at about break even. Now, if this is a time sensitive trade and time theoretically is working in the favor of this out of the money vertical spread, if I were to advance this date again, what should happen with our profit or loss? Well, it should grow. You see that? As I move that date up, as I'm advancing time theoretically, we can see time working in the favor of this trade. 763, 922. So this is calculating for us how much time is working in the favor of the trade, assuming price or volatility haven't changed. And but that kind of, you're probably saying, well, Cameron, how realistic is that price hasn't changed at all or that volatility hasn't changed? Well, that's one of the great things about this tool is that we can play with all three of the variables and see the impact to the profit or loss of our chart, of our trade. So for example, let's say, I wonder how our trade would be doing on, let's go forward a little bit further. How about we go to December 28th? Let's say that our stock price has gone from 154 up to 158. Well, if we look at our profit and loss position here, we're at $52.50 at the current price. 108.39 if the price has gone up 10%. We down 361.16 if the price goes down 10%. Okay. We also see the impact on our display on our profit or loss line. So with all of our variables here, as we change things, it changes the profit or loss of our trade. So if we advance this again, time keeps working in the favor of the trade. Profits continue to grow. But what if price is falling? You can actually see our price is moving across the chart, and it changes the profit or loss scenario of the trade. Okay. And then finally, what about volatility? Well, this is a credit spread. In other words, it's primarily a short position. And if volatility rises, does that hurt traders or help traders? That actually hurts traders. Okay. If volatility drops, that tends to help sellers. Okay, so let's just increase our volatility. And you'll notice if we increase that volatility, that's chipping into profitability. It's also gradually lowering us away from our maximum gain scenario. Continue to increase that volatility, and you can see that expressed numerically. You can also see that expressed visually. All right, so this tool has really powerful metrics that allow us to experiment with how a trade is likely to perform as price, time, and volatility change. And we can see that numerically. We can also see it visually. And of course, there are reset buttons here. If you've been in here tinkering around and you've changed your chart around quite a bit, and you just want to hit the reset button, one thing that you can do is either change the individual changes that you've made down here. So for example, I can reset just the parameters, or I can reset all the changes that I've made to the chart just by coming up here and selecting reset. That just sets everything back to where we were and allows us to just start from scratch. Okay, so now let's get to that question that was posed earlier. So we've been experimenting with the date, with volatility adjustments and stock price down here. What in the world are these numbers up here? Well, these have to do with the probabilities of the trade. All right. So with all sorts of different options, a question that commonly arises is what's the likelihood that we're going to be at or above a price level, at or below a price level on a certain date in the future? Okay. Can you say, hey, by the way, that helps my screen to pick the colors to see better? Good, Ken. Yeah. It's nice to know these little techniques that can be applied on thinkorswim. And it's nice to know that the engineers had the foresight to create that tool, to create that, or to offer that option, right? To change and customize things. Well, let's look at our probability field. And what you'll notice as you look at the chart, there are these numbers displayed in between our price slices. And I'm going to do some other things with these price slices in just a moment. But the first thing I'm going to do is set our date forward. Now, this trade expires on January 20th. Okay. So how about if we change our date up here to January 20th? And what you'll notice is a couple of things. Number one, there's this gray area in the background. There's gray here. You'll notice the gray ends right there and it ends right there. And then there's white beyond that. Okay. And then there are other numbers up here, 10.16, 41.15, 41.66, and 702. So what do these mean? Well, addressing the gray first, the gray relates to this number up in this box, 68.27. How many of you can think back on your college math classes and you know the implications of that number, 68.27? That's actually one standard deviation. This gray field is just showing us starting from the current price of the stock and going up or down one standard deviation. How big is that? In other words, what if we were to draw a line giving us a 68% probability that our stock is going to fall within a range? How wide would that range need to be to give us a 68% probability that we fall within that range on January 20th. That's what this gray box is. So it's telling us, another way to say that is there's about a 68% chance that we're going to be between about 167 to the upside and about 144 to the downside on the expiration of our trade. All right, so that's the gray. What are these numbers? Well, these are telling us as of January 20th, in other words, as of the date that we selected here, well, there's a 41% chance that the stock lands between 154.78 and 170 and a quarter. There's a 10% chance that we land above 170 and a quarter. There's a 41.7% chance that we land below 154.78 or current price and 10% below. And there's a 7% chance that we are more than 10% below the current price. Suppose that's the easiest way to say that. 41% chance that we're above, but less than 10% above. There's a 10% chance that we're more than 10% above the current price on January 20th. So these are probabilities. So start to think about the implications for our trader. What does a trader want to know about this trade? Well, they might want to know, hey, I wonder what the odds are on January 20th that we're actually going to be above 150. That's where we have our maximum gain. Well, one of the features of thinkorswim is we can actually just click on one of these slices, click it and drag it over. I'm going to drag this one over to 150. Let's position it as closely to 150 as we can. Let's put it right there. That's close enough. Okay. Now, if I look at my numbers, I can see, well, there's about a 57.3% chance that we're above 150, but not more than 10% above. And there's an additional 10% chance that we're more than 10% above. When I add those two numbers together, there's about a 67.5% probability that we're above 150 at expiration, or in other words, that we're in maximum theoretical gain territory for this trade. Now, if I flip this on its head, let's click this and drag this over a little bit further, and let's put it at 145. Oh, look at that, nailed 145. Well, it looks like there's about a 17% chance, pretty close to 18% chance that we're below 145. That's in our maximum loss territory. So as intimidating as that maximum loss sounds, ooh, I could lose 390 bucks. I can only make 110. Why in the world would anybody do this? Well, because there's only about a 17, 18% chance of maximum loss, whereas what was our probability again here? Let's get this. There we go. That's pretty close. There's about a 68% chance of maximum gain. Now, if you were doing the math on that, you probably noticed, well, if there's a 68% chance of maximum gain and there's a 17 or 18% chance of maximum loss, that only adds up to like 86, 85%. What happened to the other 14 or 15%? Well, let's click this one, drag it over to 140. Let's put it right at 145, close enough. Yeah, there's about a 14% chance that we're not at maximum gain or at maximum loss. Instead, we're somewhere in the middle. Okay, that's where that additional 14% lies. And this one's important because with this trade that we just discussed, if we're below, let's say we're at 148, somewhere in the middle between 150 and 145, what that means is that we've sold a 150 put, and we bought a 145. The 150 is probably going to get assigned. The 145 just expires worthless. We're put some shares, and we might wind up owning shares if we are in this area. And that can actually change the profit or loss scenario of the trade going forward. So just be aware, if we're trading vertical spreads, that a short option can be assigned while the long option just expires worthless, especially in this case, in this scenario. All right. So, so many tools contained within just this tool that can allow a trader to see very quickly how a trade can play out. All right. Let's reset this one more time. I'm going to come up here, click the reset button, this just sets everything back to essentially to scratch. But one thing that I wanted to review is this is kind of nice that we can see potential gain, potential loss, break-even points on different dates with all three of our variables changing on, regarding price, time, and volatility on an individual trade. But for some options traders, they really like the fact we can actually analyze profit or loss scenarios for an entire portfolio. All right. Now, before I do that, let me take a quick look here just to make sure I'm not missing any important questions. They're all important. You know what I'm saying. Anyway, okay. Speak Truth says, instead of dragging the slices, is it possible to input a precise value and then the slice auto adjusts to a specific value? Yes, you can do that right here. Just change that value right there, and it'll just pop it over on the chart. Click and drag, I think for some is easier. For others, if they do have a specific value they want to put in, they can do it right there. And also we can manipulate the slices. If we come over here, we can set our slices through all sorts of different ways. The default is to use the base or the current price and then plus or minus 10%. We can go plus or minus 15%. We can go in steps, like 5 up, 5 down. That would be 11 rows, 3% step. All kinds of different ways that we can slice up the chart. But yeah, to address your question, you'd make those sorts of penny by penny changes, getting very precise. Just change the value right there. So should we do it? Why not? Let's just change this right to 169. Watch what happens. Keep your eye up here on this one. That's the one that we're changing. I just changed that to 169. I hit enter on my keyboard, and you see what that just did? It just popped this over to 169. I think that's what you were asking about. Okay. Anyway, let's reset that. There we go. But now, here's the thing. If we were to add this Amazon trade to our existing portfolio, well, we already have 3 other example trades in this paperMoney portfolio. I wonder what the resulting profit or loss scenario for the portfolio would be if we were to do that. Well, we're going to come down to the bottom down here. And you'll notice right now we're just analyzing a single symbol. We're analyzing Amazon. Well, if I click on that, I can choose portfolio beta weighted. And then the final adjustment that I want to make up here, it says your beta symbol. That means what are we generating the chart based on? So let's change this from Amazon to SPX. So what this is now showing us is a chart of how our entire portfolio, not just Amazon, but our 3 other positions plus Amazon, how those would likely perform as SPX moves. So what's this slice now? It says 47.44. Well, that's the current value of the S&P 500. If the S&P 500 were to move up 10%, how would our portfolio likely perform? Well, it would actually move beyond a maximum area, and this is just related to all of the trades that we have going on. And actually our profits, we'd be profitable, we would start to decline. Our best outcome with our portfolio, as it's currently constructed, you don't even have to know anything about what's in it. I can just see, we would do best if we were somewhat bullish on the S&P 500. However, something else I can say about this portfolio is we don't want the S&P to go down. Right? If the S&P goes down, this portfolio starts to lose money. And I can just move my cursor back and forth, and we can keep our eye on the numbers over here. This is showing how we'd be performing today if the S&P 500 were to rise or fall, and how we would be performing at our first expiration, well, the January 20th expiration that we've selected. Okay. So moving down, we'd definitely be moving into loss territory over here. Moving up, we'd be moving toward a maximum gain, hit a peak really right there for our January 20th expiration. And as we go beyond that, it starts to chip away at those gains. Speak truth. You say I'm a gifted teacher. Well, that's good, because there have been moments, if I'm being entirely transparent in this presentation, where I thought, I could go back and clean that up the next go round if we come back and revisit this. I'm always thinking that. But yeah, my goal here always is to be as clear to as many people as possible with something as potentially valuable as the Analyze tab here. All right. So thank you. I appreciate the kind words. But everybody, let's hit the reset button one last time. I'm going to click yes, telling the system, yep, I really want to make that change. Might as well switch this back over to Amazon. And let's switch let's just put it back on, well, by hitting reset, it put it back on the single symbol. So now we're essentially back to square one. So we've actually accomplished everything that I set out to do today. And you're probably saying, Cameron, but we have all these other tabs. Yeah, when this series of lessons wraps up next week, not next week, but the week following, we're not done with the series known as Getting Started with thinkorswim. I'm going to continue delivering webcasts, but we're going to just be exploring individual elements of the platform that we can't just cover in 3 very quick lessons. So I hope that you'll keep putting it in your calendar to join me. We have lesson 8 coming up next week, but it is time for me to let you go. Time for me to let you loose. As you do go, I have a couple of requests. If you're not following me on X, please do. Also follow Ben Watson on X. So Ben's handle there is at Ben Watson CS. Mine is right here. You're seeing it on your screen at Cameron May CS. But if you track us down on X, click follow, then that just allows you to get our insights, our updates on what we think might be happening with current market conditions. You can see what we're doing basically with our weekends and our holidays. Yeah, it's a great resource not everybody takes advantage of. We'd love to have you there following us, but also make sure that you have the calendar saved, okay? Schwab.com/coaching. This is where you can go to find the events that are coming up through the rest of the week. You can go back in time and check the archives, and make sure that you go to YouTube and subscribe to our Trader Talks webcast from Schwab Coaching channel. All right, time for me to let you go. Everybody, thanks for giving me your time today. I definitely appreciate that. It's always my pleasure and my honor to be your presenter. We have more webcasts coming up. Coming up next is Trading ETFs with Connie Hill. She's fabulous. She's going to do a great job for you. I will see you next week for lesson 8. I'll also look for you on X. But hey, whenever that moment arrives, when we have the opportunity to talk again, I just until that moment, want to wish you the very best of luck. Happy trading. Bye-bye.